The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Welcome to Tiger Technicians Hour this 9th day of June. And pleasure to be here Monday through Friday on market days, 11 o'clock till noon. Eastern Time at 877-927-6648, as you just heard. Now, a couple of things. In my opening call, which I now, when I get a chance over the weekend, as I'm finished the charts, as I usually do, now I just post them so that I have to do the repeat on Monday, and all I do is just grab all the ones from Saturday and Sunday and repost them, plus any fresh ones that I'm posting. For subscribers, I'm not sure, I just can't remember exactly. I think I sent my Dow Diamond chart, the 120-minute chart, where I mentioned that we needed a leg D out. I think it went out after the last one, which is usually at about 8:35, which is the Traders Corner. That's where we have all our positions, what we're looking at, why we're looking at, what we've missed, what we've got, etc., etc. Now, what's interesting about this, actually, let me just show you something. This is the E-mini. Let me grab this chart, make it a little bit bigger. This is the daily, leg E/A. I put in the A because the technicals are just so good at 98%. But at 98%, to take another 10 days or so to make an entirely new buy signal to a buy mode with a leg D to come, I find that a little stretching it here. Not only that, I have signs that are saying that on a very near-term basis, we're real close to some kind of a consolidation. Now, is it just consolidation? Is this whole draggy thing, the copycat atmosphere that's going on internationally, where Bernanke set the pace, very successful, everyone believes, because the stock market is 10,000 points higher than it was on March the 6th, 2009, over 10,000. Is this now actually very much more, 10,400 points? Is this now a case of do as I do as well as what I say, and that is to keep rates as low as possible, and thereby allowing free money to be out there, not free, but pretty close to free, and pushing stock markets higher and higher? Is this what's going to happen? Does that mean we've actually eliminated the chance of setbacks? Well, I believe that a market is a market, a chart is a stock chart, and what I'm looking at here is stretchiness, and that stretchiness means that through the rotational aspect, consolidations can occur and not be anywhere as deep as they usually are, what they would normally be. And that's going to last for a little while. And at some point, that particular safety net is not going to work. Some other safety net is going to have to be found. So let's just run the numbers here to make sure we're on the same track. The E-mini has extended leg E. In the daily, the MACD is very strong. This is the June. I'll switch to the June, July, or September contract, soon as the little warning sign comes up for me. And in the meantime, I'm calling this leg E in the 120-minute chart, and that allows, now this is going to be interesting. So going to the Dow, so the E-minis are up $2. The Dow itself was up a little more before, but now it's up 23 at 16,009. Let me just get this right. There we go. So now the Dow is up 23.57 at 16,947. almost the high of the day. The high of the day was 16,951. In my opening call, I give a lot of parameters to watch, but you can make it as easy as possible. If you're watching the Dow, I said, has the resistance in the 16,950s to the 16,970s. I don't believe I mentioned anything other than that. Let me just quickly check because I don't want to say anything that's not accurate. 2009, 30s to 50s. So up to the 50s. I didn't even put the 70s. Why? I suspect that we're running out of energy now, that this is leg GC. I believe it's really leg C at this particular point, that they will get a pullback because the MACD is pretty good. The stochastic's at 97%. That is really nice. And that there will be a pullback, and then there'll be a nominal new high into that inside track that you can see here in my daily chart that I show my subscribers every single day. And as that occurs, we're going to be watching real closely to see if that inside track repellent zone right there, it's like a channel, but a little mini channel of the major channel, becomes the repellent line that it has so successfully for quite a while. What's interesting is that the VIX index is up 40 cents at 1113. Well, I consider that to be a little bit of a heads up just to say, hey, keep watching this, because if later today, I suspect there's going to be a pullback to negative territory, either today or tomorrow, then I think we get one more pop to the upside in the Dow, maybe the S&P. And at that point, you are looking at the chance of some kind of at least a shorter-term pullback. Let me just show you the 120-minute chart that I sent to subscribers. This is a particular pattern. This is the pattern that I started out. That's how I learned about my stalk leg formation. There used to be a pattern that I followed very closely when I used to hand chart back in the early 1970s. And it was a pattern that went up. Doesn't matter how many peaks it made, but it was basically like a straight line, because then it made an oval pattern. And then there was another move to the upside that basically took, now I have to take this from here, from somewhere around there, from the middle, where I went to the upside. So if that's the case, there's a measured move that looks very much like a propeller shaft. Obviously, it's a lopsided propeller shaft, because the one shaft should go to the oval propeller. It should be actually a round propeller shaft, shouldn't be oval, and then it should continue vertically up. It doesn't matter. It's the idea. And that's really what gave me this whole concept of the stalk leg, when I noticed that there were formations that did not go one-to-one. They just broke above that oval pattern and then broke down and came back into the oval. Very interesting. So where does this take us to? It takes us to round about 169.51. The high so far today is 169.39. I suspect that we're getting real close. A number of technical indicators here say that even though 97% in the 120-minute chart, the MACD is good, we're getting to a little toppy area. That's not a major sell signal or anything. It just says there are signs that say that in the next 3 to 5 120-minute chart, 120-minute bars, there should be a consolidation and then one sudden spike to the upside. And that could be a move that says, hey, that's maybe the top for now, at least for now. So let me continue with the numbers. So the Dow is up at this point 23 points at 69.47. The S&P is up 2.94. This is the cash at 1952.38. The comp index is up at 11.72 at 4,333. The Qs 1, 2, 3. Now look at this. This is very interesting. The Qs on leg E starting to hit a lot of resistance. They're at 92.76 with a high of 92.87. My suspicion is that we aren't going to go much higher without some kind of consolidation towards the mid-91s. That's a low 91.20. Breaks that, we go to 91.65. That's going to be it. Be what I watch during the week. Leg E in the 120-minute chart. And let me just open this up so you can see what I'm looking at here. A very strong leg E/B in the weekly chart. I'll talk more about the weekly chart probably tomorrow and the next day. Right now, I just want to go through these to establish where we are. Look at the New York Stock Exchange, NYA.X. This is a very powerful vertical. This is now parabolic leg D in the daily chart, but it's only a parabolic for a short period. It's when weekly and monthlies become parabolic that you really have to worry. So this is something to keep a note of. Leg D in that resistance area in the 120-minute chart, the weekly chart, and not yet at the highs in its all-time high in the monthly, but the dashed line can take you to the 124 area. Right now, you're at 10,922. So here's what's very interesting. The gold contract, GCM, and I still see nothing in gold at this particular point other than little bounces. I still see gold going lower. You'll only know when the gold contract, let me go to the GLD because most people look at the GLD. The GLD at 120.65, up 0.4 cents. To my eye, the moment it breaks 119, 118 support, there's a real problem there, and I think that's really what I'm looking at. I'm looking for a test of the 115 to 113 area, with 114.46 being the last significant low of last year. And now let's go to the, and silver is right at this particular point. Silver is up just a fraction, 19.08. It's high-grade copper that I focused on. And over the weekend, I did a little bit of work on the high-grade copper, and it seemed to me that the pullback that we've had from that peak E in the continuous contract is something quite significant. Why? Because it's established quite decisively that the 200-period moving average at 3.15, this is on the continuous contract, it's very close to the contract, is very important. And that we're underneath the 9-period moving average. And the MACD is weak. And the stochastic is attempting to rally, but I think it's a fail. I suspect that if copper breaks $3 at any point in June, it's going to slide real quickly down to the 2.90, 2.85 area. That means 3.10 is going to be important, because if it can rally, it's established a higher level of a trading range, and that's going to be important. If we look at the TLT, and this is going to be another issue that I look at, 11.02 was the low 3 days ago. 115.19 was the peak D high in the Chapman wave methodology, but it also made a peak E in the weekly. And because of that, the MACD is pulling back, but it hasn't crossed negative. The stochastic gone from very good in the 80s down to 77 in the weekly. So this entire week is going to be important, because if by Thursday we're starting to see a very sharp pullback in the general market, that's going to establish that bonds have a chance to try to get back, at least to, in the TLT, to the 113.50 to the 114.20 area, because a close, any daily close below 110.50 would be negative. I just got a couple of things to do, and I'm going to go to our first caller. A couple of things is the dollar index. Dollar's just trying to get back into that range, which is making the 200-period moving average really important support at 80.43 in the index. So we'll be watching this a little closely over the next couple of days. Let's go to Nahid in Safety Harbor, Florida. Nahid, how are you?
Very good, thank you. How are you doing?
Very well, thanks. You'd like to look at?
EPA?
EPA, that is Copa Holdings, SS, an airline, Latin American, Panamanian carrier, and I'm going to be talking about this because it's a fascinating chart pattern in the monthly, and you've got triangles that we will talk about. We'll be back with Nahid in Safety Harbor and Garo in Newport Beach, California. We are all over. I'm in Newton, Massachusetts. Wow, what a big triangle. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We are back. We're back with Nahid in Safety Harbor, Florida, and we're looking at CPA, which is Cooper Holdings. And this is a very interesting chart. I'm going to ask you what you're doing. I'm going to suggest a couple of things, though. First of all, it made a peak F in the monthly chart. It's had a very strong pullback from the 162.83 level down to the 121. That's 40 points. Big move for this, biggest move it's ever had to the downside. But it is holding on the 9-period moving average in this retracement in a kind of what I call a gray A. Basically, what I'm really looking at here is I suspect we're going to make an H pattern as it fails at some point fairly soon. That's what I'm thinking. But there is an asymmetric triangle in the weekly chart that also has a couple of things that are suggested here. One is it's taking its time to break above that level, the declining trend line. So at 144.70 to 145.50, suddenly it's above that. The previous high was round number 145. That was the week of the 30th of May. If it breaks above that, it could actually start to move towards the 147.95 level. That's kind of what happens with these triangles, these asymmetric, the triangles that are not exactly the measurement angle, the downside to the upside. This one is, I'm going to do it strictly like that, has about a 40, almost a 45-degree angle to the upside, but on the downside, it's only about 20%, I'm guessing. Oh, where's my little protractor? I can't find it right now. I have a little protractor here to look. Oh, there it is. So let me have a look. You won't be able to see me looking, but I'm going to have a look nevertheless. And it says that it's at an angle of 20 degrees, 22 degrees. Oh, 22 degrees to the downside. So this is what I'm looking at here. The daily chart is the one that's really important. It's had a very nice bounce and is making a cup formation. Now, there are different cup formations. This is what I actually talk about very often. I do when I come across them, and I'm doing, a Master Trader series, we can take a lot of time. And it's one that looks exactly like a heart that's divided into two parts. So now how can I explain that visually? And imagine that from the in the cup formation, there's a sudden move that takes it to almost to the other high on the left side, but then it pulls back almost to the low at the bottom, and then starts another move. That is like a divider. Now, sometimes that becomes an exact plumb line to the midpoint from the move down to the move up. Today, with the general market like this, and a Copa is down 3 cents, not being able to actually the whole of last week wasn't to be able to establish a leg C above the 145 round number high on the 30th of May. My suspicion is it's just stuck in a trading range. And the only way I would trade it is if it broke above penny above 145, it goes to 145.01. I just put in a trading position that says, hey, you can now climb towards 145 78 high of the 9th of April, and then the peak C1, which was 147.95 level. So that's the only way I would treat it with a tight stop. The downside, I don't even see a short just at this particular moment. I'm suspicious of this move. I'm suspecting, based on the 120-minute chart, that there's a very good a chance that if at any point this week it takes out 141.50 support. Not only will it take out the low of 1.15 made on the 14th of June, but it actually will slide deeper. It looks to me like it's setting up a rectangle formation, and it's at the top of the range right now. The only way is if it breaks that 145 level, would I treat it as a trade. Now I'm going to ask you, what are you doing? What's your plan?
Well, I was thinking about buying the option, a call, but I wasn't sure if it's a good idea yet. So
there's three things that are important to me. One is the general market at this point. When you've got stocks that are breaking out, that have been laggards, it means there's a chance that we've got another rotational correction possible here, as maybe some of the big movers are now going to take a breather. And as you pull back, so you're going to be looking at maybe stocks like a Ford, a General Motors, an Alcoa, a General Electric, maybe those are the ones that are going to take the lead, so that even if the market pulls back, they're going to hold quite well. But if I'm looking at this and all of a sudden I'm looking at a last move from about Wednesday last week being how can I call it, an emotional response to being on the wrong side, being either short or something else, or just not in the market, then I think that CPA is vulnerable to a pullback. So I'm going to make the suggestion that hold off for a day or two on CPA. I just don't see the benefit right now, and that's really what I'm thinking.
Okay. All right. Sounds good. Thank you.
Okay. Thanks for calling. We'll be back with Garo in a short while.
Markets investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
How are you? Garo there?
Yes, I'm here, sir. Hi,
Yeah,
how are you, sir?
How are you?
Very good, thank you. And you?
Good. I'm well, thank you.
All right. I'm talking today regarding PCP, Precision Cast Part, which they build instrumentations and wiring for the cockpit of an aeroplane.
Oh, I didn't realize they also did the aero. Oh, that's interesting. Okay, because I've followed the stock for years just as a price mover. But, whoa, interesting.
Yes. This one I was watching for a long time. I'm watching for a daily chart. If you bring that SAR parabolic, and you'll see that on a daily chart, the candle hit that top dot on a Monday, 6th of May.
Yeah.
And I bought that. Yeah. The number on that was $254.
Okay.
So, yeah, since then, I'm keep buying 500 shares every day, and I'm selling at the end of the day.
Oh,
So
and
then
every day it's closed close to the high and open near the low. Very good.
Absolutely. Yeah, I buy it on 5-day simple moving average. You see all the candles. The following day, they hit the 5-day, and they move up. and at the end of the day I sell it, and the following day I buy it again at the 5-day simple moving average, and so on until today.
Okay,
Today,
so actually, so all of June you'll be able to do this, right?
Yes.
And today?
Today there is a resistance at $274.13 on my chart.
Right.
And I want to know that is this a time to cool off a little bit and go on the short side, or there is more room to go higher?
Okay, I'm going to do this right now. Give me 1 second.
Sure,
Get it on
sir.
the 120-minute chart, but I'm not showing anything. So, okay, so what I'm going to do is this. I'm going to do two things. One is I'm going to have, let's see. My 120-minute chart so far is still very strong, but as of this moment, I'm starting to get one signal, and that signal says, be really careful because, whoops, I got a problem here. Hold on 1 second, just 1 second.
Sure, sir.
There are just an important call coming through, and I wasn't able to take it. So there are a couple of things that I'm looking at here. Within the context of the 120-minute chart, I want to actually go to my own work. I just did the parabolic on the chart itself, but now I want to go to my own work, and that 120-minute chart has a little different look to it. Oh boy, I think you've nailed something perfectly. You've got exactly the greatest move that you could have got in this particular rally, and you had the technique and the courage to fulfill that response by going along every single day. And I'm looking at this with such a smooth move to the upside. There are a number of charts that have the same implication. It's at peak E in the leg E in the 120-minute chart, and for the first time, I'm actually getting this in a lot of charts. My on-balance volume, I use volume in a little bit of a different way to many people. I use it just purely based on the unbalanced volume, and that's bumping into resistance. And it doesn't say that it can't go high, but this is exactly the point where I'm seeing the greatest chance of resistance. It also says that to go short would be to go short too soon. Why? Because I'm only now getting a sign that says there's a crossover in the moving averages, and it's a suggestion that the upside is limited, but it doesn't tell you that the downside is a break of significant support. It just says at this particular point it's bumping into upside resistance. So I'm going to make the suggestion that you've done exactly the right thing. You've traded just beautifully for 5 days. You've identified the perfect scenario for the stock, and that your gut instinct as well as your technique is saying to you, maybe now the risk is a little bit greater than the reward on the upside. But I'm going to suggest that you hold off for 2 days before you think of shorting. And today's Monday. Wednesday, we could revisit this stock again, and that might be the time that it and maybe the general market is a little bit overbought, and then we're going to see some kind of a pullback. Whether it's a short-term pullback, depends on the rotation and what's happening in the stocks that I've discussed as really important indicators right now of the rotation going into the late cyclicals. So this is a stock that's participated in a very different way, because I just always have thought of this as automobiles, but you've just told me now, and look, Boeing is still acting very well. Boeing at this particular point, nice retracement in the weekly chart. The daily is in the big D. I'm looking at all of these things, getting to a point right here where I'm beginning to look at the upside as being limited. The downside, I have a suspicion, but suspicion is not the technicals. I do not have the technicals to tell me about the downside yet, other than to say we're very close to some kind of a consolidation. And as I say, it stocks like PCP, if they really retrace sharply here, that's going to drag even the best ones down. But if these guys hold well, it means it's just a minor pullback and it's time to look at buying. So hold off. Let's see what the next 2 days bring us.
Yes, absolutely.
And I have to congratulate you. That was, I'm not sure I would have played it that way, because it took a lot of experience and certainly a lot of tenacity to be able to grab a stock towards the low of the day and hold it towards the close, and for it to actually participate and do what you wanted. That's fantastic. So,
thank you, sir. Thank you.
Congratulations. Thanks for calling, Garo.
Thank you.
Let's go to Dan in Basking Ridge, New Jersey. Dan, how are you?
Doing well, Basil.
Good.
Yes, sir. I was calling about, I had a question about what you saw. If you could take a look at a 5 or even longer year chart on GLD.
Absolutely, yes. You have a question on that, in particular because of the 5 years? You wanted to go far enough back that we've got the peak in place, and now we're looking at the supports on the left side. Is that kind of how you're looking at it?
Yes, sir.
Okay.
And versus, basically from it was in about an 8-year uptrend from 2000.
It was a fabulous 2008. Yes, that was just the one from the October November low of 2008 down in the in the 68s, going to more than doubling. It went to 185.85, and look now, this is fascinating. I'm pleased you brought it up, because you can see I drew in this chart a little while back. There's a monthly chart. I chose the low point of the May of 2012 at 148.53 as a potential left side right monthly chart, and that says that you could go all the way to December before testing the low of 102.28. That's the monthly, and those things tend to occasionally change in dynamics. So it's really the weekly that's the one that I would look at much closer. And what you can see is the pattern that I drew in years ago of the H pattern, the lowercase h turning into a lowercase m. That was the one that was so important, because it went from the low of that was the week of June the 28th, 2013 at 114.68, and it went right to 200-period moving average, couldn't cross, and then pulled back, made a notch formation, went to a lower low at 114.46. Oops, is that 114? 114.46 by 20 cents. And then what it does, it rallies back to the 200-period moving average and is pulling back again. So what I'm looking at here is that in the pullback that we're looking at, it's using up time more than price. I'm suspecting that at some point, excuse me, just had to have a drink. At some point, there's going to be a pullback that tests the 114.46. That is the low, excuse me, when it comes in, and I have a left side, right side price time match, although I find that these are not as accurate as many of the others that I do. The little H patterns, they can have a different left side to the right side price time match, but this does come in the week of the 11th of July. Now, what's really important about this is my eye says that there's a chance, because the MACD is holding quite nice, there's a little bit of a bounce, but that would be a sudden move down to test the 114s. But I'd be wrong if the GLD suddenly has a rally, and that rally takes it above 123.50 in the next week to 2 weeks, because what would happen then, if you've made it what it can only be called a successful test of the left side low, a much higher one, and can give you another bounce. And that bounce then go back to 133. I'm watching this really closely. I'm looking at some of the stocks that have actually started to react, and if they don't pull back all the way to the recent lows, that would tell me I've got to watch this real closely, because if we do have a sudden market pullback, that could be, it could be for a number of reasons. I want to watch, is the dollar about to break to the upside, which would start to potentially weaken gold, sometimes that counterpoint resolution, or I'll be looking at the dollar going to weaken again to make an H pattern instead of the cup pattern and pull back from the 80, the low 80, or let's call it the mid 80s, 80.60 area, down to the 79.70, 79.50, because that'll help gold. So I don't have anything right at this moment to say to me, I want to nibble on the GLD on the upside. I don't even have something to say, I want to go to the DZZ for the short side. It's just kind of stuck there. But your eye of looking back is correct. I'm looking at that same thing, so that if I look at the monthly chart, my monthly chart is saying, hey, wait a minute, mister, it's taking a lot of time. It's just the trading range just gets narrower and narrower. You really can't say anything until the GL decisively breaks below between 78, let's call it 79 and 78.50. The moment you break under that, now we're talking about a different kettle of fish. Now we're talking about weakness, the downside, and the stochastic will probably go down to the single digits. I hope that kind of answers your question.
Yeah, it did. I was just looking at kind of a general down channel, general trend since 2011?
Yeah, right.
And the other thing I wanted to talk, if you have time, and I could take it off the air, is just if you'd look at RKT at the paper products.
Oh, RKT. Now, why does that ring a bell? But I'm not sure.
It used to be, they've taken over some of the other smaller, I think they took over some of the other smaller papers, but they're one of the biggest paper
wow, this is very interesting. So let me do this. I'm going to, let me get to it in a moment, because I had some requests. I don't want to run out of time for the requests. And I also want to get to this because it is very interesting, because it's going to tell us something about that industry. So let me look at it maybe, but at first I want to go to Netflix. It was a question that I had, and I'd like to go to that, and then I'm going to come back. So thanks for calling, and I do appreciate the good question on the GLD. Those are the parameters that I'd be watching. I'm putting down RKT. So we've got Dan, RKT, and GLD. I've written it down. So I'll be doing that very soon, okay?
Thank you, Basil.
Thank you for calling. So, folks, I want you to look at Netflix, because I think that these momentum stocks are really going to be key to what's going on. I've got, and the question was, I've got a leg G. What was the question? The question was, hi, Basil, would you please look at NFLX during your show? I have a Chapman wave count of G on the daily, or was there an instant restart on May the 16th? Great question, great observation. Now, the whole thing about this is an instant restart can only work within 3 sessions. So 354.27 was the high of the 13th of May, and then 354.40 was the high of the 14th. So that gives you 3 days, and that's the 3-day breakout. I circled it as a potential instant restart a little while back. Now what we're looking at is something very interesting. Why? Because it's gone to E with a very minimal peak, and then it went to an F with a very minimal peak, and it's gone to a G, and I call it G/C, and it's making a peak today. The day's young, but to me like it probably won't go above the high of Friday, which is 434.89. Is Netflix trading at 426.75, down 3.38. The MACD is just turning down, but still very strong. Stochastics at 95%, but the unbalanced volume and relative strength index are my indicators here that say, watch out. From here, there's a chance that Netflix could have strong resistance just above the high of Friday at 435 to 436, and that you've got to watch 417, because if that is taken out in the next 3 to 5 sessions, it could have quite a bit of a pullback, which it hasn't had since it broke out from that low. I'll be right back. And we'll go to RKT.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, we're back. Okay, so now let me just do this. So Netflix, so the answer to the question is, I have a parallel wave count. Whoops, I typed it in the wrong chart there. Netflix, let's look at that. NFLS. So, is this a peak F in the 120-minute chart, which suggests, now, a couple of things. Let me just do this. I'll give you a little lesson here real quickly. In the Chapman Wave methodology, when you have a potential instant restart, but the MACD, the fast-moving average of the MACD, remains very strong, and within the context of that, what you have is a leg G. That is where you can often get a pullback. So I'm looking at this and I'm saying, yes, there might be one more high. I'm going to be watching it real closely, but I suspect that 458 round number high on Netflix might remain, at least for now. So I'm going to say, if you're long, I would just tighten up the stop on one of your positions real tight just to be able to take a really nice gain off. The rest is, if you're looking to short, I would hold off. There again, like I said to Garrow, on his position on PCP. Hold on, maybe 2 days. By Wednesday, I think I'm going to have a lot more information. You don't want to be too early here in shorting, and I think we're getting real close to that area, but as I say. So here's the other thing, a question. We've got Robert in Chicago. Hi, Robert. How are you? Robert there. I think Robert listens on the computer, so he'll be popping up in a sec. Hi, Robert. Oops. Maybe not. Robert. Okay, so I think Robert wanted to look at Whole Foods. Now, Whole Foods is doing a little bounce here at WFM. Robert, if you're there, just yell, I'm here. But in the meantime, back at the ranch at 41.08, up 15 cents. I suspect that Whole Foods is making the H pattern. It's trying to fill that huge gap. I think it can go a little higher. It's at 41.10, up 17 cents. My suspicion is it can get to maybe the 42, maybe. Hi, Robert, you there?
I am, Basil. Thanks.
Okay, so your position now on Whole Foods is?
I don't have one. I was going to go long, but I think I'm mistaken.
No, this is very difficult for me because I see Whole Foods as having a really choppy lower highs, lower lows with bounces in between, number one. Number two is the time to go long was just as across the 9 moving average on Thursday with a very tight stop and a small position thinking, okay, now I've started to fill some of the gap. My big point, and I'm going to make this as a market thing because we're just about to run out of time because Larry Pesavento is coming straight after this. My big thing right now is that I'm really looking at some of the stocks being vulnerable to a pullback, and I'm looking to see how other stocks are holding because if we rotate once again, it's a high-level consolidation. If we come back strongly now, and Whole Foods is able to maintain its stance by holding about 39.45, and then it could fill the gap a little bit more because then maybe it's just very oversold and it's a bounce. But if you were to get in now, you'd maybe have 2 days of upside activity potential, a pullback tomorrow and a rally into Wednesday, maybe Thursday. So I don't know if a put is really worth it at this particular stage. Just because I think the risk is that if it fails in the next 2 days and comes back under 39.40, that could be it for a while for Whole Foods. So I'm sorry, you might be missing out if you're taking my advice on a good rally. My suspicion right here is that it's a little risky, although I think that the downside for now is stuck between 39 and 36, but that's 2-3 points. So I could be wrong. I'm just going to say to you, for me, I would only go in with a small position right now with a 50-cent stop, and it's a trading stop, and as it moves into the 42s, I'd be ready to take some off. Hope that helps you. Thanks for calling. Sorry for so short. So, folks, make it real easy right now. I'm watching the VIX. I'm watching the Dow. I think there's another leg up. We'll deal with that tomorrow and Monday. So a bias is still upside, but limited at this point. Hey, thanks for being a stay tuned. Larry Pesavento. Check out my opening call on TFNN.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.